Volatility came roaring back in the markets today after an explosive move. The S&P gapping up above 6,700 this morning. We were up over 1.8% at one point, but ultimately closing down 1.56% at 6538.76. It was nearly a 250-point move from the open to the close, closing on the lows below what was big support at the 6,600 level. You can see volume in the options market all over the place between 6,800 and 6,500 on the downside. Gamma exposure remains solidly in negative GEX territory. This is now the sixth close on the S&P 500 below the zero gamma exposure level. And you can see all the major strikes today trading in negative gamma exposure as we basically just rolled lower the entire day. Flipping over to our daily candlestick chart, you can see again how large this candle today was, opening above the 50-day EMA, which is this red line on our chart, closing well below it. And this is actually breaking down near recent support. We talked about this in yesterday's video, support just below the 6,600 level. This has been in place going back to earlier in September of this year. So pretty big support here. It's something to watch for with the VIX spiking above 26 today, and we'll talk a little bit more about that here in a second. One of the risks to the downside that we've been talking about, if the market cannot find its footing and we continue to see a rolling over in the market, the gamma exposure at this 6,000 strike remains in place. This is from open interest, which has been in place going back to May. For our part, we do maintain hedges for these kind of event-driven markets like what we're seeing now, and so our hedge on SPX in one of our portfolios is between 6,600 and 6,000. And of course, we're now starting to edge into that hedge exposure, obviously offsetting losses in the rest of our portfolio and potentially making some outsized returns if we see further downside. By the way, you can track our trades in real time as we manage our options portfolio by becoming a member at geeksoffinance.com. You can also get a sneak peek of what we're trading right now by checking out our community Discord, absolutely free. I'll put links in the description below to both of those so you guys can check it out.
All right, Anthony, let's take a look at the Qs. I have the QQQ weekly chart pulled up. What a spectacular reversal today. We had noted that the last 2 weeks saw a loss of the weekly whole moving average, and last week actually had a very clean retest and rejection of the whole. And then earlier this week, we noted that we had lost the 9-period SMA. We had also noted that 590 had shifted as the largest GEX cluster for QQQ. So at this point, we have 580 staring at us as a very large potential target. QQQ is at 585.67 now, so we're very close to that 580 target. Let's look at a couple of things that we can use as contrarian indicators when we're looking for reversals. A couple of factors that we often see coinciding with bottoms or lows that can be bought. Let's look at our GEX intensity gauge for one. This compares the current GEX reading of negative 1.2 billion. When we see this intensity gauge get toward the extreme, in this case, if we were to see QQQ at negative 3 billion or greater, this would be a situation where we might start looking for a contrarian reversal to the upside. Another thing that we might look for is if we see QQQ's price reach the largest negative GEX cluster, or perhaps one of the negative GEX clusters that's just below that largest cluster. So in this case, we have a declining set of GEX clusters from 580 down to 570, and it really drops off after that. And we never look at GEX in a vacuum. So speaking of 570 to 580, I did want to bring attention to the fact that at the current moment, we can look at the weekly chart and see that the weekly middle Keltner channel is at 576.86 right here. So we definitely like it when the indicators that we prefer to use match up with what we see on the GEX chart as well. So definitely a negative pattern. And, we're talking about contrarian buying opportunities here, but we may be close to a spot where QQQ might find support.
Thanks, Sean. Next, let's take a look at GLD, the gold ETF, basically flat on the trading session, closing at 374.85. GLD has been in a larger consolidation pattern after hitting a parabolic all-time highs above 400, a big rejection, and has since been trading in this 370 to 380 range for the most part. And we've seen in the last week really narrowing right around this 375 range. If you've been following our YouTube channel for a while, you know that we have a GLD weekly income strategy. This is a sub-strategy in our larger portfolio. Today, we actually locked in $800 profit on our November 21st GLD 385 puts. These were short puts against our longer dated long puts, which are currently sitting at the December 19th 390 strike. So we closed those short puts for a profit and rolled out to next Friday's expiration, collecting another $7.35. And you can see, even though we were short at the 385 puts, we collected enough premium to be profitable, even though GLD is trading around the mid 370s. And we actually rolled down the options chain to the 380 strike for next Friday on those short puts. And a quick look at the current gamma exposure picture will give you a good idea of why we're targeting this 380 strike. You know, the 375 strike, obviously the largest gamma exposure when you consider both positive and negative GEX, but we are seeing quite a large skew in positive gamma exposure all the way up to the 400 strike. Not much negative gamma exposure below 375. So the skew is definitely to the upside. We believe GLD is in a larger consolidation pattern with potential upside coming in the next few days or in the coming weeks. And so we want to start targeting those higher strikes, like basically what we've been doing over the last couple of weeks. We think the next target is going to be this 380 strike, which we actually hit yesterday just briefly before rejecting. And we think that target is likely to be hit again here in the next week.
Thanks, Anthony. Let's take a look at VIX and VVIX. Starting with VVIX, the index reflecting future expected volatility of the VIX itself. And I just wanted to bring attention to some of these larger red candles. Virtually every candle that you see that had a large spike and reversal intraday marked some sort of the end of a consolidation or trend continuation period where there was a pullback or sideways move that then changed course. We saw some early positive signs today with VVIX, with VVIX being down 14 at one point. And unfortunately for market bulls, it completely reversed and VVIX made a higher high today. This VIX move appears to not be done, and I would really want to see VVIX showing one of these large reversals like we've circled in the past to signal that the VIX may be done with its spike. The VIX itself also retesting and holding key support areas. Today we reached the rising whole moving average and exceeded this 25 GEX cluster that we mentioned. I was particularly focused on the GEX cluster at 25 because following VIX expiration yesterday, we did not see the GEX at 25 diminish. In fact, we saw it remained as the largest GEX cluster with the December expiry. So that, to me, signaled that the VIX climb may not yet be over. Now, today we reached 28 intraday. We did not quite make it to this larger and growing GEX cluster at 30. So we still may see a further spike with the VIX. And really just tactically, as long as we remain above this whole moving average, I think we need to be wary that any retracement in the VIX could resolve higher. And I would really like to see that yellow line broken to signal that we may be headed toward the 15 to 18 area. 18 actually seeing some pretty high volume today. So we may be close, but the pain may not be over yet for bulls. We want to see what happens if we reach 30 and if the VIX holds that level or rejects.
Next, let's take a look at Nvidia. Nvidia, of course, reporting earnings last night. We talked about this in last night's video as well. And what a full swing that we saw today. Nvidia ultimately closing down nearly 3%, just under 181. And look at the candle that we're seeing. Nvidia basically with a 10-point swing overall. In yesterday's video, we talked about this range over the past couple of months, basically between 210 and 180. You can see this giant range which is formed And we're actually trading an iron condor targeting price to stay within this range. So the 210, 215 call credit spread, and on the downside, the 180, 175 call credit spread. So you can see with today's candle, we're now approaching the bottom end of those wings. And so obviously we'd like to see this hold with some sort of bounce. If it doesn't, however, we're still currently profitable in our position with about another week or so to go to expiration. But if these wings get threatened further, we can roll this position down the options chain just slightly. For example, we could roll down to the 200 strike and down to the 170 strike on the downside, basically targeting a range which is 10 points lower than currently. If you look at the data, however, we can see today most of the volume in the options market between 180 and 200. Gamma exposure also concentrated between 180 and 200. And so, my bet is that more than likely, even if we see a little bit further downside tomorrow, more than likely this 180 level will generally hold as support based on the current data. If it turns out that Nvidia has lower to go and we start approaching the 175 strike, then I think we can go ahead and take some action and roll down the options chain to these lower strikes. So overall, the strategy of using an iron condor targeting the major gamma exposure concentrations is still working out well despite this insane volatility that we're seeing in Nvidia. We still have a number of different choices that we can make over the next several trading days, and we can still target the gamma exposure structure if it starts shifting lower. And guys, you can get full access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies by becoming a member at geeksoffinance.com. Members also get access to the premium channels in our community Discord. We've got a ton of great traders in there sharing their own trade setups and strategies, and you can also track our trades in real time as we manage our options portfolio. I'll put links in the description below so you guys can check all of that out. Thanks so much everybody for watching, and we'll see you guys in the next video.